Welcome. In this video, Zbcn coin price will now go up. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is carefully examined, it becomes clear that the long-standing downtrend the price had been moving within has finally come to an end, and this descending channel is no longer acting as a barrier. Throughout this downtrend, every time the price attempted to rise, it faced selling pressure and pulled back to lower levels. However, a crucial moment in technical analysis has arrived, and the price has decisively broken this trend line to the upside, signaling a potential trend reversal. This breakout should be considered more than just an ordinary move. It marks a significant structural shift, indicating that buyers are beginning to take control of the market. Immediately following the trendline breakout, the price movement has been highly educational and promising from a technical analysis standpoint. That's because the retest phase, closely watched by many investors, where the price returns to test the previously resistant trendline as support, has unfolded as a textbook example. The determination shown by investors during this retest, the heavy buying interest, and the increase in volume all confirm that this was not a false breakout, but the start of a genuine directional change. These kinds of technical confirmations show that a trend is being built on solid and reliable foundations. The successful completion of the retest phase suggests that investors now have their sights set on higher levels. Currently, it seems that the positive scenario anticipated by market participants is unfolding step by step. After breaking the downtrend and completing the retest, the price has launched an upward move. This development carries important implications not only for short-term traders, but also for those building medium and long-term strategies. That's because every solid uptrend begins with strong technical signals, and upward moves supported by such breakouts are considered much more reliable from a technical standpoint. Looking at this technical picture, it's only natural for investors to feel more optimistic from this point forward. Breaking out of the downtrend is not just a technical detail, it also marks an important psychological threshold in the market. Moves like this give investors confidence and may prompt buyers who were previously on the sidelines to enter the market. This increases liquidity, raises volatility, and makes price movements more intense. Considering that the current rally is supported by both technical and psychological factors, it is highly likely that the price will embark on a steady upward path in the coming period. Additionally, such breakouts followed by a retest-based rally not only attract the attention of technical traders, but also of algorithmic trading bots and large investment funds. These structures are often included in systematic buying algorithms. In particular, trend reversals present a new window of opportunity for large investors looking to open positions. The strong movement currently being shown by the price could be signaling now is the time to buy, not just to individual investors, but also to institutional players. This bullish move may not just be a short-term spike, but the first step in a potentially larger and more sustained uptrend. If the price maintains its current momentum and continues with volume support, the next targets won't be previously reached resistance levels, but entirely new price territories. This could lead to the formation of new highs on the chart and a complete change in the trend's character. In conclusion, the breakout from the descending trend in which the price had been trapped, the subsequent technical retest, and the current upward rally all present a highly positive and promising outlook for investors. Such structures are considered very reliable signals in the technical analysis literature and are often precursors to major bullish moves. But we can't make decisions based solely on trends, so let's now look at other metrics as well. Stay tuned. A striking and highly promising structure is currently visible on the chart. When we examine the price movements in detail, we can clearly see that the market is beginning to form what could be considered a textbook example of a W pattern, as described in classic technical analysis literature. These types of formations are among the strong structures that investors closely watch in bottom areas and evaluate as trend reversal signals. The W formation indicates that the market is preparing for an upward move after testing the bottom area twice. At present, this formation is nearly complete, and the price has reached the second bottom. This region represents one of the most critical phases of the formation. Second bottom levels are technically significant because this is the point where buyers consider re-entering the market with strength. The fact that the price previously responded clearly from this area further increases the reliability of this level. In technical analysis, one of the key factors that validate a level is how it has performed in the past. Given the current structure, the strong reaction from the previous bottom shows that this formation holds serious potential. One of the most notable aspects of the W pattern is that after testing the bottom twice, the price begins an upward movement. This typically indicates that investors are starting to overcome selling pressure and gain positive momentum. It also reflects that the market is tired of downward movements and is preparing for a reversal. The current price action is progressing exactly in line with these dynamics. The price has reached its second bottom, and from this point, the possibility of an upward bounce appears quite high. This could signal the potential start of a new uptrend for investors. The technical target of the formation is quite clear. Once the price breaks out from the area where the pattern was formed, it will likely aim to reach the initial high, the first peak, as a minimum target. In other words, a return to the starting point of the formation is a natural and expected outcome. This move provides investors not only with technical confidence, but also psychological reassurance. Such structures show that sellers are losing strength and buyers are starting to take control. In most cases, this is accompanied by an increase in volume, further confirming that the uptrend is healthy and sustainable. At this stage, the key for investors is patience and strategic planning. For the W formation to be successfully completed, it's not enough for the bottom levels to be tested. The price must also decisively break through the middle peak level, known as the neckline. However, given the current situation, if the price is inclined to make an upward move from the second bottom, it's highly likely that this breakout will occur soon. This provides investors with technical reassurance and opens the door to potential gains. If the formation is completed, the target price level is technically quite clear. The price will attempt to project the height from the base of the W formation up to the neckline. This gives us the projection target of the pattern. In this way, investors can not only evaluate the current move, but also plan for potential future pricing scenarios. The current chart structure and price behavior clearly show that these targets are realistic and achievable. In summary, the price is currently on the verge of a very positive and strong formation. Reaching the second bottom of a classic and reliable structure like the W formation could present a significant opportunity for investors. One of the strongest technical developments on the chart is that the price managed to break above the 200 EMA again. This is considered a highly significant reversal signal in technical analysis. The 200-day exponential moving average is one of the most important tools frequently used by traders to determine the direction of the overall trend in the market. Long-term traders and algorithmic trading systems often consider this level as a trend filter. If the price is trading below this average, it is assumed to be in a downtrend, and if it is trading above it, it is assumed to be in an uptrend. Therefore, in the current situation, a break above this critical average could mean the start of a possible uptrend. When we look at how this level has worked in the past, we come across quite remarkable examples. In particular, the last time the price broke above the 200 EMA, the market experienced a meaningful and impressive bullish surge. This rally was not only limited to a short-term move, but also reassured investors and positively affected the overall mood of the market. The potential for a similar scenario to play out again now seems quite high. This is because many technical indicators suggest that this move is not just a temporary bounce, but could be a harbinger of a broader uptrend. 200 EMA is important for long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.